24%.
Yeah, because we've been
So
going
greed
up.
is back.
Greed's back. We've been going up for the last couple of weeks and quite strongly.
Share market's been
Share
going up.
market's been going up, and I think that's taken out some of the fear out of the market. But I think a little bit of it's coming back today. If you look at the U.S. market now, they're down about 1%. Those job numbers, there's an employment report which is salary-based, in other words, payslip-based, which suggests that the U.S. is still shedding more jobs than analysts would like.
And they were hoping for good news on that front. It didn't come. So American stocks are low, which means we'll probably be lower tomorrow.
We were, at one stage, we crossed 25,000 Rand on the all-share index. Now, remember, we were at 18,000 down in March. So that's an incredible rise that we've had. And the fact that we actually held on to gains today is just, I think, was mainly through some gains on the commodity in resource shares. But industrials and financials came under pressure.
We've got a lot of results to talk about later, and we will be doing that. But it is interesting to note that only 18 months ago, we would have any number of analysts and any number of chief executives saying we shouldn't have lazy balance sheets. Today, lazy balance sheets are a great plus. Why is it that fashion has to affect us shareholders so badly?
I think people are still very fearful. I don't think anybody wants to take any risk. And why they got lazy balance sheets is they still fear that there's some bad news coming. So no one wants to take risks and either lend out the money or...
but my point being, David, 18 months ago, the fashion was you better gear up, you better borrow. We don't want to see lazy balance sheets. Today, please God, have reserves.
Well, I think that credit market is gone. I think that we're not going to see that again, where money is just lent out very easily. So
the fickle investment analyst. That's what I say. Dave, another bit of news coming through today. Remgro, the non-executive director Dougie de Jager. Remember, he got into
trouble over Remgro, over Rainbow
insider trading.
I think he traded in Rainbow.
He resigned today.
It might have been pressure on because of that. I think that he bought a few shares. I mean, the profit was very, very minor.
Well, what happened was that, and there's a good message here for any director of a public company. His investment advisor, or the guy who managed his portfolio, his private pension fund, bought the shares at a time that de Jager was on the board of Rainbow. It was disclosed fully to shareholders. It was disclosed all the way through. But there has been clearly some kind of a furore, and he said, what to hell with it. Yeah. And he's retired, even though the board, chief executive said that that board would not be asking him to step down. Anyway, he's off into the sunset.
I think the one factor is that held against him is that the investment manager actually phoned him and discussed it with him, and he bought, not realizing where that they were in a closed period. So unfortunately, it mitigated against him.
Introducing day-to-day banking from BOE Private Clients. It's the next level in banking for the fortunate few. BOE Private Clients. Money never sleeps.